Stocks, look at that. They were higher across the board. We had some cooler than expected inflation data, but there is growing skepticism over how reliable the CPI numbers may really be. Steve Liesman joining us now with more on this story, which is going to get some attention, Steve, because, questioning the data is like a thing.
It is, but not for political reasons, for methodological reasons, Brian, to use a very large television word. Stocks, as you say, they're loving this much cooler than inflation report. But the bond market and economists, they're pretty skeptical, with many saying changes to the data gathering process and some of the methodology may have distorted the numbers. RSM, Joe Buswella says, dude, that was one flawed report. Oxford says encouraging signs of disinflation, but something feels off. And Pantheon says data collection issues means trends will only be clear in December. Economists have raised questions about the sharp drop in housing costs, as well as whether the survey, limited to the second half of the month, might have overweighted for holiday discounts. Morgan Stanley writing, the BLS might have carried forward prices in some categories, effectively assuming zero inflation. If these technical factors are the main source of weakness, we could see re-acceleration in December. CNBC's contacted the BLS on these issues. We have not heard back yet. If it's accurate, it might suggest the inflation decline not as much as indicated, but still maybe perhaps under control. Take a look at the two-year yield. Actually rose, a sign the bond market wasn't buying this big change in inflation and that the Fed would be easing sooner than expected. You can see the two-year yield rallied a lot of up and down there on the left side of your screen and sold off modestly since the number was announced. A little bit of a two-point rally this last couple of hours or so. Fed probabilities also unchanged, the 24% probability. So the market not saying, hey, this means the Fed's going to cut in January. A little bit more probability of one in March, a little bit less in April than it was, and pretty sure that we'll have that second cut by June. Irony of all this, inflation is probably in housing is probably declining, and it takes a while for those declines to show up in the CPI. But this looks to be too much too fast to be credible. So be excited about this, Brian, just not so much right now. Be excited also about the interview we have tomorrow morning with John Williams, the New York Fed president, exclusively on CNBC at 8:30 a.m. Kelly?
But I want to be clear. So this is not like, remember the late Jack Welch, those Chicago guys questioning the jobs data. Then when we had Biden in office, we had someone on the right say, oh, these numbers are just made up. They're all fake. That's not what we're talking about here. No. You're saying this is I'm not sure I could say it, methodological?
Yeah.
I think I got that right.
A trouble with how they put the numbers together, Brian. And basically, they didn't have all the data they normally get. They used some fill-ins, and the fill-ins they use are what bothers people. They didn't necessarily show inflation. They may have carried a zero over. Also, the idea that they only gathered prices in the second half of the month. I have been saying that old data is better than no data. I'm not sure that unclear or questionable data is better than no data.